head towards understanding how do it looks like when we record for cash flow from investing activity. Okay. So cash flow from investing activity is nothing but purchase, sale of fixed asset or investment in investment. Okay. So if we see there is no investment given in the question, the only thing given was opening and closing balance, right? And depreciation. Okay. So we have opening balance, we have closing balance, we have depreciation figure. So from that, we have prepared a fixed asset, that is machinery account. Under machinery account, you had opening balance, we had closing balance, and depreciation given to you. Depreciation, we have recorded it in our cash flow from the operating activity, and the balancing figure which is coming on the debit side is nothing but current year purchases of your machinery. The entry passes plant and machinery account debit to bank account, right? So when you purchase a machinery, it is cash inflow or cash outflow. When you purchase machinery, you have to pay money to the vendor, right? So it is a cash outflow. So it will be recorded as negative 1,96,000. Understand, if you don't put this brackets, okay, if you don't put this bracket, one thing, your marks will get deducted. Other thing, when you calculate it, you will get the wrong answer. Okay. So there is nothing else given related to the investing activity. We can check the financing activity now. Financing activity which starts with the initial state of your balance sheet, that is your issue of shares, preference, and we saw there was issue of shares, there was issue of preference shares also. One was equity, other was preference. So both of them were, understand, equity shares will always be given as issue. Okay, there won't be any kind of redemption or repayment in case of equity share. But when it comes to preference share, there is a chance that you will repay, because preference shares can be redeemable, irredeemable, convertible, any kind of. Okay, so that is kind of, you can say, a simple trick to remember that equity share capital can't have a reduced balance. Other than that, if you're buying back your own shares. Okay, so there was two issue, one was equity, other was preference. Then it was given that interest is paid on the debentures. So we will see, whenever you pay the money, cash goes out of your business. Whenever you pay interest, entries interest account debit to bank account, right? And interest is charged to your profit and loss account also, right? So we will, it is a financing activity, we will deduct it. Then dividend paid, which is given in reserves and surplus part. And again, it was given in the additional information also that it was actually paid. It is not just proposed one, but it is actually paid. Paying dividend is again your financing. On what amount do we pay dividend? It is on your shares, which is 4,000 rupees, right? And then you total your financing activity. How do we total? We total all the positive, that is inflows, and we total all the negatives, that is your outflows, and finally you get the number. In our case, we are getting positive 1,55,400, means this is cash flow from financing activity and not cash used from operating activity like we got in the operating part of the question, right? See, here I got a negative 12,000. That means it is cash used. But when you get positive numbers in investing activity or in financing activities, cash from investing or financing activity. In our case, we are getting it from financing. In case of investing also, we are getting negative. That is, outflow is more than inflow. That is cash used. And finally, we need to total all the activities, that is from operating, from investing and financing. Let the number be positive or negative. We have negative number from operating, we have negative number from investing, we have positive number from financing. We total it, we get 52,000 as the amount. And next step is to add the opening cash equivalent. I told you what is cash equivalent, your cash balance, bank balance, current investment, marketable investment. Okay, we will add that and finally you arrived at 28,000, which should match with your balance sheet closing cash and cash equivalent, right? So once you're done with this, your cash flow statement is ready. Okay, let's summarize the cash flow statement chapter now. Okay, so in cash flow statement, we have understood cash flow statement is prepared as per accounting standard 3, which is issued by ICAI. What does cash flow statement gives information about? It gives us information about changes in the cash and cash equivalent, okay, from previous year to current year. What are the cash and cash equivalent? Are cash balances, bank balances, your current investment, your marketable investment, all such things. Okay, and we are not just interested in knowing cash inflows and outflows, that is cash payments and receipts in totality. We are also interested in knowing whether it is from operating activity, investing activity, or financing activity. What are the operating activity, investing activity, and financing activity? We have understood that also. Operating activity were nothing but your main purpose. Like a garment manufacturing company, the main purpose is to buy, sell the clothes and to incur expenses relating to that. So, what were the cash inflows for them? It was sale of the garments. And what were the cash outflows? It was purchase, paying for the employees, right? So, income tax paid. Okay. Then, what were the cash from investing activity? Cash flows from the investing activities were nothing but something which you invest in fixed assets, which is not the main purpose of your business. For example, that garment manufacturing company is buying a furniture, buying a machinery. It is not buying the machinery for purpose of resale. Okay, so that is nothing but a fixed asset for the company. If you purchase, that is cash outflow from the investing. If you sell those assets, it is your cash inflow from the investing activity. And one important point to know in investing activity was short term investment. We don't treat short term investment as your investing activity, as it is part of your cash and cash equivalent. Lastly, we have understood the financing activity. What is the financing activity? I require fund for expansion of my business. So from where will I bring the money? From bank by way of loan. But that is also not enough. I will also issue shares in the market. Shares can be of two kinds. What were there? Equity shares, preference shares. I can also raise money by way of debentures. Okay. And we earn and we pay also, right? So when you issue the shares, you have to pay them dividend. When you take bank loan or you issue debentures, you have to pay them interest. Okay, so any kind of payment in form of interest and debentures are your financing activity, and any kind of receipt of interest or dividend is nothing but your investing activity. Don't get confused in it. And again, an important point, for a financing enterprise like your bank, paying of interest or giving bank loans is their operating activity, because main purpose for which bank runs its business is lending and borrowing. Okay, so for them it is operating activity, but for us who is doing normal business of garments or grocery, for us it is a what? It is a financing activity. Okay, and then we understood some peculiar items, like your extraordinary item. If I sell, if there is a loss on theft, loss due to fire, which doesn't happen on daily basis. So if there is any kind of losses which is not a certain one, they are treated as your extraordinary item. And lastly, one more extraordinary item was your proposed dividend and provision for taxes. So any kind of provision for taxes or proposed dividend made during the current year is treated as your extraordinary item.